This is a PowerPoint presentation on accounting principles made by my student Akshay Agrawal. He's a very sincere student. He made this PowerPoint presentation as a part of project given by me. Now let us revise accounting principles quickly from this PowerPoint presentation. So first, the meaning of accounting. Meaning of accounting is the art of recording, summarizing, reporting and analyzing financial transactions. We record the transactions in journal, and then we classify them in ledger, and then we summarize them using the final accounts, that is trading account, profit and loss account and balance sheet, and then we make reports and analyze the information through the tools of analyzing the information are comparative statements, common size statements, which we will be studying in class 12, and we will be using ratio analysis and all these things. This entire process is known as accounting. The accounting process also we have learned in chapter 1. Now, what do we mean by GAAP? GAAP is generally accepted accounting principle. GAAP are the rules and regulations which we have made for making our accounts so that there is uniformity in accounts. Because, for example, if in India we have no GAAP, so what will happen? One accountant is using depreciation as 10%, another accountant is using depreciation as 20%, and what they will be saying that I have more profit, but the other person will say that even I have earned equivalent profit, and you are saying that you have earned more profit because you are showing less depreciation. So to make the accounts comparable, ताकि सब अलग अलग मेथड यूज ना कर लें, सबके मेथड्स सब comparable हों हमारे accounts, we have made generally accepted accounting principles. Now these accounting principles are given to us. They are, first is the business entity concept. We discussed that while making the accounts, we assume that owner and business are two separate entities, and we make the accounts from the point of view of the business, right? And we consider capital as an internal liability of the business. In the entity concept, we discussed about the Solomon and Solomon company case that you will be studying when you will be doing your higher studies in commerce. Now coming to the money measurement concept. See how beautiful this PowerPoint presentation he has made with so many pictures to make the students feel good about the subject. Now money measurement concept says that all the transactions and events which can be recorded in terms of money, which can be expressed in terms of money, will only be recorded in the books of accounts. The events which cannot be measured in monetary terms, howsoever important they may be for the business, but they cannot be recorded in the books of accounts. For example, ill health of manager, death of a trustworthy employee, good working conditions in the organization, all the happiness. We cannot record all these things in the books of accounts. Then coming to accounting period concept. Accounting period concept says that the life of the business is divided into time interval of 1 year, and on the basis of that 1 year is known as accounting period. That accounting period can be financial year or it can be calendar year, and on the basis of that we make our accounts. Then full disclosure concept. Full disclosure concept says that in business, any material fact, you cannot hide that information while making the accounts. You cannot say that I am not writing sales because I don't want to write sales. I don't want to show my income. I don't want to pay tax. इससे मेरा स्लैब रेट जो है थोड़ा सा ऊपर चला जाएगा, थोड़ा ज़्यादा टैक्स पे करना पड़ेगा. So I am not writing this. No. In accounts, there is a rule, full disclosure concept, that whatever you are recording in the business, you need to fully disclose it. Then materiality concept. Materiality concept says that you need to record all the material information all the significant information and facts in the accounting books. For example, if you have purchased stationery, you have purchased books, you have purchased pens, you have purchased ink pots, you will not be recording it as an asset. Rather, you will be recording it under the head stationery as an expense. And it depends from one organization to another. For one organization, a repair of 2000 may be a material fact, which is a small business, which is a small in size. And for an organization whose turnover is in crores, for that information, or for that organization, a repair of 2000 is not a material fact. So it is totally case sensitive. It depends from organization to organization. Then coming to conservatism's concept of prudence, it says that anticipate all losses and expenses, but do not provide for, or but do not anticipate any profits or gains. That in business we make provision for doubtful debts, we make provision for depreciation, we are looking into the future and we are anticipating all the losses and expenses. क्या क्या losses हो सकते हैं, क्या क्या expenses हो सकते हैं, वो सब मैंने रिकॉर्ड कर लिए, पर मैंने कोई भी गेन और प्रॉफिट रिकॉर्ड नहीं करा है unless and until it is actually earned, right? This is the principle of conservatism, or we call it prudence. Then coming to cost concept says that all the assets will be recorded in the books of accounts at their purchase price. It includes the cost of acquisition. For example, we have purchased the machinery in 1 lakh, 10,000 we have paid in transportation, 10,000 on installation. Machinery को हमने factory में fix करवाया. All this will be included in the cost of the asset. So machinery हम कितने में record करेंगे? 1,20,000. Right? 1 lakh cost of the machinery, 10,000 in transportation, 10,000 in installation. So we will be recording the machinery at the historical cost concept. Now matching concept. Matching means we are matching something. So in matching concept in accounts, what we say is that if we have earned a revenue, we must have a matching expense related to that. If revenue is generated, we must have spent some money on generating that revenue. So the revenues and expenses must be matched and they must be recorded in the same accounting period at that particular period. The process of ascertaining the amount of profit earned or loss incurred during a particular year involved deduction of related expenses from the revenue earned during that period. Revenue recognition or realization concept. Revenue recognition concept says that revenue is recognized when the transaction has taken place and the obligation to receive the payment has been established. We will not wait for the actual cash to be received. We will record it in the books of the accounts on the date on which the transaction has taken place and the revenue has become due. For example, credit sales. Though it has a lot other points in revenue recognition concept, but because it's revision, I'm just doing this. Now, objectivity concept, verifiable objective concept. Objectivity concept says that the account should be free from any kind of personal bias of the accountant or any other person, and they should be verifiable. उनको हम verify कर सकते हैं through the use of evidences and vouchers and other things. Now coming to dual aspect concept. Now coming to the dual aspect concept, see how beautifully he has shown us this photo, and in this photo it is showing equal, that debit is equal to credit. What a nice photo. So dual aspect concept says that every transaction will have a double effect. It will has dual or twofold effect and should therefore be recorded at two places. So in accounts, for every transaction there will be a double effect. Debit and an equal amount of credit, or plus minus on the debit side only or plus minus on the credit side only. So a transaction will always have a double effect. कभी ऐसा नहीं होगा कि एक ट्रांजेक्शन का सिर्फ हमने एक एस्पेक्ट रिकॉर्ड कर लिया और उसका कोई सेकेंड एस्पेक्ट नहीं है. It will always have a double effect, and on the basis of that our accounting is going on. And now going to the next slide. I think that will be a slide of thank you. So thank you. It was a very beautiful slide. PowerPoint presentation made by Akash, and with the help of this we did our revision.